Since around the middle of 2022, there has been a consistent message circulating among Americans that a recession is imminent. However, despite these concerns, the United States has not experienced any economic downturn in the past 9 months. This raises the question, what is really happening? In recent years, there has been a significant shift in global dynamics, marking a reversal of globalization. Just a decade ago, relations between Russia, China, and the West were improving, and our supply chains were becoming more integrated. However, the COVID-19 pandemic changed everything. Then, the Russian invasion of Ukraine strained relations and pushing us back into a Cold War-like scenario. Sanctions were imposed, and it all centered around the financial power of the United States and the dominance of the US dollar. This highlighted the current world order's focus on the US dollar, especially in trade and energy markets such as oil. The Eastern powers are fighting back against this US dollar dominance. We might be witnessing the potential collapse of the current world order and the US dollar's prominence. Fortunately, there is one safe haven that shines amidst this uncertainty: gold. Several factors have been identified as potential triggers for an upcoming recession, including increasing interest rates, high inflation, and an inverted yield curve, and an unexpected banking crisis. These factors have led to speculations about the possibility of a recession on the horizon. To understand the origins of this situation, we need to look beyond Russia's invasion of Ukraine and the subsequent sanctions. It traces back more than 15 years to the Western financial systems experiencing a massive collapse, the global financial crisis. This crisis opened the door to the downfall of the American-dominated world order. Easy access to cheap debt incentivized millions of people to take on excessive leverage and purchase homes they couldn't afford. Eventually, this unsustainable bubble burst, and many individuals couldn't repay their debts. In response, the government adopted a new approach to the recession: quantitative easing, QE. They began printing money and injecting it into the economy. Initially, the impact seemed manageable, with inflation remaining under control, and it took several years to recover from the recession. This led many to believe that QE wasn't so detrimental after all. However, when the COVID-19 pandemic hit, governments had no choice but to resort to QE once again to stimulate the economy. They printed and spent money extensively, trying to revive economic activity during a time of halted production. But then came the feared consequence: inflation. Inflation rates surpassed government expectations, reaching nominal figures of around 9 to 10%, while the real data showed even higher rates, hovering at 15% or more. Suddenly, the US dollar lost its strength and was exposed as a plaything of an irresponsible government. It became evident that the currency was not as robust as it once seemed. According to the New York Fed Recession Probability Indicator, there is a 68.2% chance of a US recession occurring within the next 12 months. This is the highest reading observed in over 4 decades. Furthermore, other reliable economic indicators are also signaling potential trouble ahead for the US economy. This vulnerability coincided with the weakened state of the United States, providing an opportunity for its adversaries to challenge and dethrone the US dollar. This is where BRICS, Brazil, Russia, India, China, and South Africa, comes into play. With China at the forefront, they challenged the notion of the US dollar's value and started discussions about conducting oil transactions in currencies other than the US dollar. Months later, this assault on the US dollar intensified as countries looked to the Chinese example. They realized that they too could explore alternatives to the US dollar for their transactions. The attack became more significant as the idea evolved from simply using other currencies to creating a new currency backed by gold and other commodities. Russian President Vladimir Putin, in his speeches, made it clear that he saw the US dollar's decline and irresponsibility as an opportunity to establish a joint currency not subject to the whims of any single country, but collectively controlled by all participating nations. With their combined landmass and control over vast natural resources, the BRICS countries held considerable influence. In this uncertain landscape, gold emerges as a potential savior. Unlike flat currencies, gold cannot be created out of thin air, and its value remains stable over time. It has proven to be a reliable store of value, with gold itself experiencing an upward trend, reaching near all-time highs and offering the potential for significant returns. Cryptocurrencies were once considered a replacement for gold, but their recent decline in value has left many regretting their decision. Moreover, as inflation continues to persist, especially in the United States, the government's actions of printing money at an alarming rate to fund various projects further erode the value of the US dollar. The Federal Reserve's attempts at quantitative tightening are too slow to counteract the post-COVID money printing spree. Analysts are anticipating a 6.3% year-over-year decline in earnings for S&P 500 companies in the second quarter, marking the third consecutive quarter of negative earnings growth. Inflation has become a significant concern, and it is influencing various aspects of the economy. The latest data on the Core Personal Consumption Expenditures (PCE) price index, a key measure of U.S. inflation, indicates a 4.6% increase compared to a year ago. While this figure has decreased from its peak levels in 2022, it still remains significantly higher than the Federal Reserve's long-term target of 2%. Despite prematurely declaring the end of rate hikes, the Fed's credibility has been challenged as the market reacted differently, realizing the absurdity of the statement. Given these circumstances, gold becomes an attractive option for preserving wealth. It's on the cusp of breaking through all-time highs and has historically proven to be a hedge against inflation. Russia, in particular, has taken steps to remove the fiat nature of its currency. It introduced a fixed exchange rate, offering 1 gram of gold for 5,000 rubles, making it different from typical fiat currencies. While the ruble has experienced fluctuations, it has not performed as poorly as many economists predicted, especially since Russia began accepting payment for natural gas in rubles. This move defied expectations and demonstrated the potential power of a currency not subject to excessive money printing. In conclusion, the ongoing shifts in global dynamics, the challenges to the US dollar's dominance, and the rise of alternative currencies backed by commodities create an environment where gold and other commodities offer a safe haven and potential wealth protection. As the world braces for potential changes in the current world order, investing in gold provides stability and insulation against the uncertainties of fiat currencies.
Going to happen. What everybody is missing is that there is an alternative to the dollar that doesn't involve another fiat currency, and that's gold. That is real money. Everybody forgets that for thousands of years, gold was money.